Welcome to the Metals Investment Forum. It's my great pleasure to have 1911 CEO Shaun Heinrichs here. Shaun, welcome.
Thank you, Chen.
Okay, great. Tell us the story of the 1911s. Why it's called 1911?
Sure. Well, that's an important part of the story. Well, the origin of the name really comes from the discovery of the mine itself. So back in the early 1900s, when Canada was just developing as a country, there was a period of prospecting that occurred, particularly in those prairie provinces, and Manitoba undertaking a very large regional scale, I guess provincial scale program to find new discoveries. So they worked closely with First Nations communities in the area, and they would go out and they would basically take rock samples across the province, and they would wrap them up in certain colored of cloth based on where they found them. And that was when Rice Lake was discovered. They came back with a very large chunk of, I guess, rock sample, you call it, with very obvious gold showings within it, wrapped up in a blue cloth. So that's why before we used to have a logo which had like a denim patch underneath it, and that was kind of the origin. The mine itself underwent a very large kind of exploration program following that, and was into production in 1932. And between 1932 and 1965, it operated continuously, producing between 40 and 50,000 ounces of gold, usually averaging around 8 to 9 grams per ton. So it was, for a period of time, it was known as Canada's highest grade producer.
Wow.
Yeah. It shut down really just because of some issues in the general market. There was a fire on site, and it really didn't get going again until the mid 2000s. So it was a long period.
Yeah. Has been well. I mean, I think the predecessor I used to own, and they did very well, and then they even pay a dividend.
That is the goal of every mining or every resource company, to get to the stage where you're paying dividends.
Yeah.
Yep.
How did you get a hold of the project?
That's also a key part of the story. Obviously, the Klondex had acquired this asset out of basically CCAA proceedings. The previous owner had gotten into trouble with too much debt and wasn't really mining effectively. Klondex took that opportunity to pick this asset up, and Paul Hewitt was a big fan of the asset itself. Started to get it going, but Hecla Mining showed up and acquired Klondex for all their Nevada-based assets. Mm-hmm. So they took all the Canadian assets, including this one, and put it into a separate vehicle, spun it off to Klondex shareholders, and that's where 1911 Gold was born.
Oh.
I knew Paul Hewitt and some of the other members of the board back from my days where I was running or working with the company that was running Jerritt Canyon. So we crossed paths many times, got along very well, and they asked for my help in getting this going. And I said that I love the idea, I love the asset. Obviously, it's close for me. I can get there in less than half a day, and I saw it as a really amazing opportunity. So I got involved right at the spin out, and I've been there ever since.
All right. Wow. Good. So what's great. That's a very good pickup at the bottom of the market. So what's your plan going forward?
An unplanned pickup at the bottom of the market, but yes, it did work out really well.
Yeah.
So look, post spin out, what we did was, the one thing we had that predecessors didn't have was access to a very large land package. Klondex went through a bit of consolidation during their time there. They put on another 20,000 hectares onto the land package by acquiring Bison Gold. We took it another step further and staked a lot of other additional territory. So now we've got over 62,000 hectares of property there, all along that major fault structure, and then kind of dipping down to the southeast area of the property where there's other historic producers. So what we originally did was we took time to do more regional exploration, find out where the opportunities are on that gold belt, and try to work them up to a stage where they could be advanced to a resource level over time as well. So we did that. In 2023, we changed direction largely because of my kind of evolution of my role as to the CEO. I wanted to see that mine de-risked. I wanted to see that there was potential to put that mine back into production, and also see what kind of potential remained in that mine as well. So I went out, I met with Gary O'Connor, who now is on the board as an executive chair. We came up with a strategy to rebuild the resource around the property, look for potential, and then look further to see what kind of resources we need internally in terms of people in order to advance that project to the next stage. Our timing was really good. I mean, gold was still $1,900, $2,000 an ounce at that time. I thought it made a lot of sense at that price. Obviously, at $3,300 gold, it makes even more sense. Now, what Gary and I have done is working with McKelly, who also joined us quite recently, about a year ago. Very experienced geologist. We put together a brand new resource. We've got 1.1 million ounces, and we kind of launched the first ever drill program around the mine lease area. So now we've been drilling into several structures. We've been having really good success expanding new zones alongside the mine. So stuff that we can incorporate into the future production and stuff we can access actually from surface. So these two main areas, the San Antonio West and the San Antonio Southeast, are both within the mine footprint, 300 meters off in either direction from the mine, but we could actually access them both from surface as well initially. So would allow us to kind of increase the production profile early on. We need to continue to drill those areas and build them into a resource level so we can incorporate them into our next mineral resource update. But that's what we've managed to do so far. We've now actually opened up the underground again. We've discovered there's no water on the bottom of the mine. So that's going to accelerate our time frame to get into the lower areas of the mine. But we've rehabilitated the entire mine down to the 16 level, which is just under 900 meters below surface. It gives us a really good area to do underground drilling. That's where the next phase of our plan is going to come into place. So probably by the summertime, you'll see us drilling into the resource, doing extension to the resource, doing infill work, and using that to really create a robust long-term mine plan for the underground mine and grow the resource. Obviously, that's where we're trying to get to.
All right, good. And then along with all these mining infrastructure, you also have the mill basically free and clear to you. And I heard the rebuild value is much higher than your market cap.
Yeah, I mean, there's two things to look at. One is the value of the surface assets and the fact that everything's permitted, including the tailings pond, which still has about 3 to 4 years of capacity in it. And the value of all that underground infrastructure. I mean, all the development in the underground, it goes right into the face of the resource. So we don't need to redo that work. That's worth hundreds of millions of dollars. The mill itself, though, on surface, ready to go. We operated that right up until the end of 22. That's worth well in excess of 300 million in today's market. And it's tough to build those, right? It's a very long process. We've already got it. We know it works, and it's permitted to go.
All right, great. What's the size of the mill?
1,300 tons per day is currently configured. Yeah.
Okay.
Yeah. With additional crushing capacity, you can increase the tonnage up to just under 2,300 tons a day.
Oh.
Yeah, that's where it has operated at that level in the past.
So it's permitted.
It's permitted. Yeah.
Yeah. All right. Good. So when at that permit, if you can feed the mill, what kind of production profile do you envision you have going forward?
Yeah, we think. Well, the plan right now is we've got visibility on the potential to produce between 60 and 70,000 ounces from the existing mine. We want to do, I think I mentioned it earlier, but we want to do a bulk sample sometime next year, probably early part of next year, to show proof of concept, the style of mining we're intending to use. Recovering some ounces and making some gold revenue from that at the same time. But we think we can average around 60 to 70 from the existing infrastructure. We have 310 million of tax loss carry forwards, so that'll offset any taxable income for a while. Mm-hmm. Obviously, when we burn through that will have been a really good story for us. But that basically allows us to produce, gold at, say, somewhere around 2,000 all-in sustaining cost, selling it Canadian, and then selling it at, say, what would be 4,500 Canadian dollars an ounce. You make it 2,500, you're easily making somewhere around 150 million of cash flow annually from that operation. And that's the beginning. That's where we want to start. And that's, again, free of any tax implications there because we've got a big shield built up. We think we've got an opportunity to grow that profile within the mine lease because there's other areas that we've yet to test from surface, but we think there's mineralized potential in those. And then finally, we get back out to the regional belt and start going back to those areas we drilled off in 21 and 22. Where we think there's significant potential to double the size and scale of this operation. That's where we're going to start talking about upgrading or upsizing the mill. We're going to need that 2,300 tons a day.
Oh, wow, great. So for investors, what do they expect this year? What kind of immediately catalyst you see it coming in the next hopefully a few months?
Well, we've got the usual. We've got at least another 18 drill holes to come on our two favorite targets right now. Some of those are deeper, so we're going to show some depth extension off of those. We expect to get back into the underground here in the summertime. So we're in there, but we expect to be drilling in there. So that's going to be another big phase. And once you're drilling underground, you're much more productive because you're not drilling through a lot of waste rock. You're drilling right into the areas of the resource. So you can be a lot more productive, a lot more short holes, quicker, a lot more updates. Towards the end of the year, we'd like to have a preliminary economic assessment out so we can kind of show proof of concept on the mine plan that we've got. We put actual numbers based on actual assets. Next year, we get the bulk sample, and then towards the end of that year, we get through to the pre-feasibility, and then we're moving into that restart situation.
Okay, great. Well, great story. Good luck.
Thank you. Appreciate it.